Peter Eliades with you. This is Stock Market Cycles update for YouTube for the 4th of November of the year 2021. The last update we did, we virtually pinpointed the top in the market, in the S&P especially, calling for a Labor Day top, and that's virtually exactly what we saw the day before or the day after Labor Day on most indexes. And that was a top that lasted for 7 weeks. And nowadays, any top that lasts for 7 weeks is maybe considered to be a major top, huh? Well, that's about to change. We told you we thought that might be a very important and final top. And obviously, you know by now that we've gone a little higher. When I say a little higher, the S&P closed today at 4680.06. And that is 3.1% higher than its prior all-time high close in early September, okay? So, before we get into the details here, and we are going to get into details, this is a very exciting time period in the market, I would ask a couple of favors from you, the viewing audience, okay? If you're not a subscriber to these updates, please do so now. Press the subscribe button and also press the notification bell. Anytime a new update is done, you will be notified virtually immediately, and you can keep up with our latest updates on YouTube. The second thing I want to tell you is that I think for those of you that are really close market followers, that you would benefit greatly from our software and our daily video comments to our subscribers. Now, I say that with confidence, but I don't want you to take my word for it. We are offering a 14-day free trial to both the video commentary and the software. Let me show you the page that you go to. Okay, this is stockmarketcycles.com/register. So if you want only the video commentary on a free trial, you go down here. If you want the application only on a free trial, you go down here. But if you want the bundle, which gives you both the daily update and the software for a 14-day free trial, go to bundle and go down to start trial now. I urge you to do that because we are now in very critical market territory. And with my daily updates, I try to guide my subscribers day in and day out. I did a special update this morning for them, pointing out some of the things I'm going to point out to you now. Okay, here's what happened from those highs in early September, okay? We got what we call loop projections. So we saw a high there. We had a really good decline as forecast, but then the market started creeping back again. Well, this decline right here from September, this early September into early October, when you move that forward with our offsets, that becomes an offset to be crossed again for even higher projections. And that's exactly what happened, okay? That's not going to happen much longer because what's happening there is shorter term cycles. This could have been a long-term cycle top, but the shorter term extends it a little bit. Let me show you what I mean by showing you another chart. Okay, this chart is online, by the way, if you want to look it up. Just look up animated sine cycle chart and put my name in there, Peter Eliades. This is a combination of 4 sine waves, okay? I'm not going to go through it one by one. I could animate it for you, but I'm not going to do that. It would take too long. Here's what I want to point out. Notice this darker blue cycle, this sine wave right here that I'm following. Okay, that topped out very obviously right here. But notice that the price did not top out there because the next longer cycle, which is this orange cycle here, was bottoming as the longer one was topping out and caused further move to the upside, even though the long cycle had topped out. So I wanted to show that to you to give you an idea of how the cycles interrelate and that price tops don't always come at long-term cycle tops. Okay, let's take a look at some of the projections here. And over the past couple of weeks, We still thought coming into this period here that this might remain the all-time high. But once prices went above this offset, it became clear that we were going to go to higher highs. And in fact, on this day right here, this day would be, I believe it's October 26th, we got this projection way up here. And today, for the first time, we reached into that projection window. That projection on the NDX calls for 16,381.30 to 16,525.09. Now those are intraday projections, and before we leave this chart, just take a quick look. Going back almost all of this year, this has been a pretty important cycle. This cycle alone look at the many turns. It caught this bottom in March. It gave you this top here in April, May, caught this bottom again in May. Fabulous work by this software, okay? Now, when you exceed it by a little bit, you go to the next longer offset to see if you're getting higher projections. So you've seen the NDX projection. Let me show you the projection for the S&P cash. Look at this. Same thing with the S&P. We had that top back on September 2nd, had this nice decline, then started climbing back, and by this time period in here, in fact, on this day right here, October 19th on the S&P, you had this higher projection. And this projection was reached for the first time yesterday and today. So we're comfortably inside the projection window. Can we go a little higher? Well, according to the projection, you can. Projection calls for 46.52.42 to 47.29.85. These are intraday projections, bar extreme projections. We also do closing price projections, but we're not going to look at those now. Let's take a look at the Dow. The Dow is actually down a little today, but it has met the upside projection. That projection on the Dow, 36,077.81 to 36,698.90. And we're in the projection window. Yes, there's further room, but let me now show you as a kicker for the whole thing why we think that today, tomorrow, Monday at the latest is going to be a very important top. Let me show you this chart. Okay, we've shown this concept before, the George Lindsay concept of bottom to top. He was probably one of the best known cycle masters going back for the last century, I guess. He died a few decades ago, but he left his mark and he did some wonderful cycle work. This is one of the things that he did. He maintained that most market tops are marked by a previous bottom to top as that top is formed. Some of them, especially if they're important, are more than one bottom to top count. Well, here's one right here, and let me give it to you. There was a bottom January 29th of this year, of 21, and that was a pretty good bottom. You can see going back, you can go back a couple of weeks, this was the lowest point. You can go forward into today, this was the lowest point. Same thing with the next bottom, which happened to be on June 18th of 21. You can go back about 3 or 4 weeks here, almost a month, and this was the lowest low, and going forward, this was the lowest low. So two really good bottoms. How far apart were they? 97 market days apart, 97 trading days, okay? So now you go forward 97 trading days from here, and that takes you to today, November 4th of 21. So now we have a projection that's being met. We have a time sequence that's being met. But here's the pièce de résistance, as they say en France. This is a real long-term bottom to top count. Two of the most important bottoms, I would argue, of the past 8 to 10 years, okay? Let's take a look at that count. Okay, first we're going to take a longer term perspective here, and then I'll zoom in on them for you so you can see that they're exacting. This is the bottom in February of 2016, okay? And this is the bottom, the Christmas bottom, in December of 2018, okay? Now let me zoom in on them and show them to you more clearly. Here's the February bottom in 2016. It occurred on February 11th, right here. And yes, this low is indeed lower than this low. So this was a really, really important bottom in February of 2016. Okay, let's look at the next one closer. This is the Christmas low of 2018, a really important market bottom. Now this looks like the low day here, but that's only because one of the dashes adds on. The actual low day is the next day. So we can use either one of them. This was the low closing day on December 24th, okay? You went a tiny bit lower the next day. Let's look at the lows right here. 23.51.10, the next day 23.46.58. So you can use either one of these bottoms. I use this one because it's the closing low. But let's now look forward. First of all, how many days between that February of 16 low and the Christmas low of 2018? 722 trading days, okay? Let's back out on this again. 722 trading days from that December 24th of 2018 low takes you to today, November 4th. Now, if you go out to the next day, the post-Christmas low on the 26th, that gives you an extra 2 days on this side. You see, 1 day move forward in December of 18 will give you 2 days move forward here. So that means that between today, November 4th, and 2 days from today, 2 trading days from today would be next Monday, November 8th. So there you have it. Everything has come together. Yes, it's happened before. Things have come together. But believe me, the only way you can work and analyze this market is to have something that works in your tool bag, and nothing works better than this. I would appreciate it if all of you that appreciated this work will give me a thumbs up. That's very important for those of us who do YouTube updates. And also become subscribers. The way to become a subscriber, there's no charge for subscribers on YouTube. You just press the subscribe button and then press the bell. You will be a subscriber, and any new updates we do, they will be seen by you almost immediately. That's it for now. We've met the projections. We have slightly higher room to the upside if the market needs to go a little bit higher. And we've met the time parameters virtually perfectly. So things have come together again. Thank you so much for watching. We'll talk to you soon.